Welcome to Dollars and Cents, understanding your small business's financial statements presented by the North Central Small Business Development Center at Central Lakes College. In this on-demand training, we will equip you with the essential knowledge and skills to better understand your small business financial statements. In Chapter 3, you will learn to analyze your products and services to drive profitability. Whether you're a new entrepreneur or a seasoned small business owner, you will be able to directly apply the concepts learned today to your business. Hello, my name is Tyler Whitwer, and I am a consultant with North Central SBDC. Chapter 3, How to Analyze Your Products and Services to Drive Profitability. Making sure that you're profitable is, in essence, the lifeblood of a business. If you're not making money, you will ultimately not be able to stay afloat. Likewise, if you have a profitable product or service that you're not marketing or trying to sell more of, then you're essentially leaving cash on the table that could be used to further your business or personal goals. Let's first look at how you would determine how profitable a certain product is. You're going to need to know how much each unit of product costs you to produce by determining the indirect and direct costs. At a high-level example, let's say that you have two products that you sell for $6. For this example, we'll say you sell the same number of each product. Product A requires 5 minutes of labor at $15 an hour and $2.25 of material. The total cost is $3.50. The gross profit on this would be $2.50 per unit. Product B requires 15 minutes of labor at $15 an hour, but it only takes $1 worth of material. The total cost is $4.75. The gross profit on this would be $1.25 per unit. This example took into account only the very direct costs of producing a product, but it is important to show the cost of labor is crucial in the production budget of a product. If you go beyond the initial calculations here to the number of sales, you'll see that not only is the profitability per unit much lower for product B, but also it would take 8.33 hours to build 100 units of product A, and product B would take 4 times as long at 25 hours to produce the 100 units. Cost of labor for the 100 units of A is approximately $125, while product B is 3 times as much at $375. The cost to build 100 units of product A and B is calculated by taking the number of hours times the price per hour plus the number of units, 100, times the price per unit. You will see here that the total cost of product A is substantially lower than product B. Now that we've looked at the very direct costs of these two products and determined the profitability of each, we need to consider the indirect costs associated with each product. Indirect costs are a much broader range like marketing, rent, lease, utilities, officer salaries, admin expenses, office supplies, and so on. But all of these are paid out of revenue of products or services for the business. Let's try another example that relates to a retail store. When you are carrying inventory, it is simple to determine how much the item costs you in relation to how much you sell it for to determine the gross profit of that individual item. It's a little tougher, but you can use the same concept as before to determine the indirect costs to ensure that you are selling the items for enough money to turn a profit. Selling something for $20 that costs you $21 to have in the store doesn't do you any good. Once you've set your prices, you'll be able to look at the sales of each item to determine what is selling well and what you've held on to for longer than desired. If you have items that have sat around and are very rarely sold, it's important to determine why it isn't selling. Price, location, style, etc. And that will help you determine if you're going to discount it to recoup the costs and move on from it, or if you just ordered more than necessary, or any other reason that may be out there. Now, when you have an item that you're selling a lot of, you may change your order size to try to line up with the sales and the timeline you expect to sell them in. There are other things to look at with good sales though too, like is the item underpriced? You want to be competitively priced with your sales as much as possible, and you should be optimizing your profit margins on each item. A way I like to look at it is your best sellers will often be picking up the slack for the lower sales items. So the more profit you have in there, the better off you are for a rainy day. Most businesses aren't going to want to keep too much inventory on hand due to storage limitations and cash flow issues. You should be able to utilize your financial statements to help determine your best-selling items and strategies for sales throughout the year. We hope that Dollars and Cents has left you with a greater understanding of how to read and use your small business financial statements. If you'd like to continue your learning and meet with a North Central Small Business Development Center consultant, visit the website below or call our regional director. Dollars and Cents, Understanding Your Small Business Financial Statements is presented by the North Central Small Business Development Center at Central Lakes College. The North Central Small Business Development Center is a part of the Minnesota SBDC network. This video is funded by a grant from the Minnesota Department of Employment and Economic Development.